Hey, good evening. This is Mayor Walensky with, with Driving Markets. Okay, so I just want to give a quick recap on what's happening in the UK with James Hunt, which is the new Chancellor of Exchequer. If you recall, Kwasi was fired by Liz Truss on Friday and replaced by James Hunt. Overall, the problem is in the UK is that there's been a big break in confidence and a big collapse in confidence as far as global markets are concerned, because it looks like that we're going to give giveaways, reduce corporate tax, reduce income tax, spend, with no plan of funding that particular expenditure. And that sent gilts, which is the UK bonds, the 30-year gilts, sent the yield much higher. The yield is the interest you get on the bond. Now, the reason why the yield went up, which is a sign of a lack of confidence within UK bonds, went up to 4.3%, 4.4%, which is a huge rate. The reason why it went up, what happened was that investors were selling the bonds, selling the UK bonds, because they didn't think that UK was stable enough or solid enough in order to demonstrate that it was able to pay those particular rates or those yields on the bonds, or its coupon as it's more correctly called. And that sent investors scurrying to get rid of the bonds and made Andrew Bailey, the Government Bank of England, Liz Truss and the UK government panic, because if the bond goes down in price, then that is a sign that investors are moving away out of the UK, don't like the UK, and therefore it'll cost the government or the UK a lot more money to go a lot higher interest rate to borrow that money on international markets. So what Andrew Bailey did, he went out and said, right, we're going to spend £65 billion of new money, printing new money, in order to buy back UK bonds within the financial markets. And that would demonstrate and show confidence to investors, analysts, economists and traders that the UK is willing to back its bonds and therefore hopefully reduce the yield. But that's not happened. And the reason why it's not happened is because they're skeptical that the UK has the wherewithal to follow through with this UK bond buying program. So what Andrew Bailey really needs to do at the moment is he needs to tell the markets that we're going to indefinitely buy UK bonds, and that would then give a boost and the yield on the bond would come down, and therefore make the UK look like a good place to invest in. Turning from that to the pound. Now remember, a currency is reflective of the strength or the confidence within that economy. And what's happened is with the UK, the pound has been sold off, especially against the dollar and the euro. But let's just look at the pound dollar, which is called cable. The pound dollar is running around about the 113 level. It's been all the way down to 103. And the reason for that is because, again, it demonstrates a lack of confidence within the UK economy. So the pound was sold off. And then Andrew Bailey now has made some comments, actually over the weekend, that it's likely that the rates will go up a lot higher than expected at the next meeting. And that's boosted the pound a little bit. What Andrew Bailey really needs to do, he really needs to increase interest rates by at least 100 or 200 basis points, which is 1% or 2%, in order to make the pound more attractive for foreign currency or foreign investors to come in, buy the pound, because they'll get a better interest rate on their money. And that's the issue that is in the UK at the moment, is pure lack of confidence, and also some very negative comments have been made generally by economists and analysts that the UK is going to go into recession. It's going to be the first country of the G7 countries, the Western countries, the most powerful countries in the world, to go into recession. Adding all that together, it's made investors run a mile from the UK. So hopefully Liz Truss has made a good decision in bringing around James Hunt to the fore, and giving him the job of Chancellor. He needs to make serious cuts in public expenditure and bring down the borrowing dramatically, in order that worldwide global investors will get more confidence within the UK. Moving as to what's going forward, remember on Friday I gave you an explanation as to why the markets jumped up on Thursday, even though inflation went higher. Then on Friday, the markets completely were trashed again. Now, what happens is that the governors of the Fed governors of Kansas City and San Francisco, Mary Daly and Kansas City's Lisa George have come out and said that rates need to go up much higher in the US, and that sent the market shuddering south. It sent them completely trashing because they can see that interest rates in the States are going to go up much higher than expected. So you're going to have interest rates in the States at 4.5% to 4.75 end of this year, and go next year you're going to have round about the 6.5% to 7% in my opinion. On top of that, you had all of the high-tech shares were absolutely thumped. You've got Tesla, which dropped 7.5%. You've got Amazon's come all the way down to 106. You've got Facebook, which I'm not a big fan of, has come down to 126, 127 level. All these shares are going to fall below $100 in the next few weeks, and definitely by the end of the year. So the high-tech sector is going to be seriously impacted as interest rates rise. Remember, when interest rates rise, these high-tech sector stocks become less attractive because a trader investor looks at what he's getting in the bank and he says, you know what, I'm going to get more money in the bank than I am trading these high-risk stocks. So they sell the stocks become less attractive, and money in the bank where you're going to get 3.5%, 4% now in the US, it becomes more attractive. So money moves out of the high-tech sector, which is the NASDAQ, and moves into bank accounts. And that's one of the reasons why the banking sector is expected to do particularly well over the coming months. Remember, as interest rates rise, the banks end up getting a better return on their money because they're lending money out at a higher interest rate. Now, this week you've got some banks reporting. You've got the banking sector reporting. You've got Morgan Stanley, you've got Bank of America, Goldman Sachs, Barclays. You've got a lot of banks reporting this week, so it'll be interesting to see what the results are. In addition to that, you've got some tech sector reporting, Netflix. You're going to have some reports out from pharmaceuticals, Johnson & Johnson, and the States, and that will give a good indicator as to where the corporate earnings are going to be going forward. Remember, the dollar's been very, very strong, so they're making less revenue because the dollar is so strong. It's impacting on their sales. So that is a negative impact as far as the dollar in the US is concerned. Also, petrol pump prices are rising, got inflation rising. So overall, you're going to have a global impact of a downturn. On Monday, you've got the Chinese balance of trade, and the balance of trade would be an interesting one because that will show the health of the Chinese economy. And on Tuesday, you've got the GDP, the gross domestic product in China. Remember, they've had the most lockdowns than any other country. So their GDP, their gross domestic product, the production of the country has been seriously impacted. If that comes in stronger, then you could see oil move up as a result, because then the world will think, hold on, we're not going into recession, there's going to be demand for oil, oil is going to go up. Oil is going to go up in any case because you've got OPEC cutting production by 2 million barrels a day going from the 1st of November, and Biden has just announced when he wakes up that he's going to release the strategic reserves, but he doesn't have much strategic reserves because he released them last time, and they're short of oil. So they're totally dependent on OPEC in the States for oil, which is a big shame because during the Trump era, what Trump wanted to do is manufacture and release more oil within America where they wouldn't have dependency on OPEC. Biden has gone and completely destroyed that, closed down all of the energy production within the States and made America totally dependent on OPEC oil, which is a big problem, and it just demonstrates another weakness that Joe Biden has, Kamala Harris, and the Democrats. Expect gold to fall a little bit further next week. As far as cryptos are concerned, you can expect Bitcoin seriously to fall significantly. Hopefully that's given you a bit of background to the UK, what's happened regarding gilts, inflation, and the pound. You can tune in to me regularly on YouTube. We do lots of productions on YouTube, do a lot of Instagram. Subscribe, follow, pass comments, more than happy to help. Mayor Walensky with Driving Markets in the studio. Have a good evening.